Welcome back. In this video, we'll bring together every module from this case study and show how the numbers ultimately flow into Form 1120. Starting with the financial statements, we'll trace the impact of M1, M2, Section 163, J, GILTI, FDII, FTC, and BEAT before arriving at the corporation's final federal tax liability. Before preparing Form 1120, we completed several supporting modules. This video serves as the final integration point, showing how those individual computations work together within a single corporate tax return. We'll follow the roadmap shown on screen and bring each completed module into the final Form 1120 computation. Every return begins with the financial statements. Our starting point is book income of $5.3 million. From here, tax adjustments transform book income into taxable income. Schedule M1 reconciles book income to taxable income. After all additions and subtractions, taxable income increased by $49,500, producing a Form 1120 base taxable income of $5,369,000. Schedule M2 tracks retained earnings activity. While important from an equity perspective, it does not directly affect taxable income. Under Section 163J, actual interest expense remained below the allowable limitation. As a result, the full deduction was allowed and no taxable income adjustment was required. GILTI was designed to bring certain foreign earnings into the U.S. tax system. In our case study, the foreign subsidiary generated $2.6 million of tested income. After applying the routine return exclusion, the corporation generated a GILTI inclusion of $2.3 million. This amount becomes part of U.S. taxable income. GILTI increased taxable income through the inclusion and Section 78 gross-up. The Section 250 deduction partially offset that increase. Overall, GILTI increased taxable income by approximately $1.6 million. FDII was introduced to encourage corporations to generate foreign revenue while keeping valuable operations within the United States. Our qualifying foreign-derived receipts totaled approximately $4.7 million. After completing the FDII computation, the corporation generated a Section 250 deduction of $273,603. Unlike GILTI, FDII creates a tax benefit and reduces taxable income. The FDII deduction flows from Form 8993 directly into Form 1120. In our case study, taxable income was reduced by $273,603. The foreign tax credit helps prevent double taxation on foreign source income. Our case study required both a GILTI basket and a general basket computation. The corporation generated total allowable foreign tax credits of $359,136. Because credits reduce tax dollar for dollar, they directly lowered federal tax liability. BEAT was designed to discourage excessive deductible payments to foreign-related parties. In our case study, the corporation failed the required applicability tests, resulting in no additional BEAT liability. This is the complete Form 1120 story. We begin with book income, adjust it through Schedule M1, evaluate interest limitations, incorporate GILTI and FDII adjustments, and ultimately arrive at final taxable income of $6.7 million. After applying the corporate tax rate and available foreign tax credits, the corporation's final federal tax liability equals $1,050,213. This slide demonstrates how every module connects into a single tax return. This slide focuses only on taxable income. GILTI and the Section 78 gross-up increased taxable income, while the Section 250 deductions reduced it. Section 163, J, and BEAT created no adjustment in this case. Overall, taxable income increased by approximately $1.34 million. This slide focuses on tax liability rather than taxable income. Federal tax before credits exceeded $1.4 million. After applying allowable foreign tax credits, final federal tax liability decreased to approximately $1.05 million. Let's conclude with the key lesson from this case study. Financial statement amounts rarely flow directly onto Form 1120. Instead, they pass through multiple domestic and international tax provisions before becoming taxable income and final tax liability. Understanding that flow is what transforms individual tax concepts into practical return preparation skills. Thank you for watching. If this case study helps simplify U.S. corporate tax concepts, please consider liking the video, sharing it with others, and subscribing to the channel. Your support motivates us to continue creating practical case studies covering Form 1120, international tax, and real-world tax return preparation. We'll see you in the next case study.